It was interesting, on Friday when China came back from holidays. Obviously, we saw the fix actually came out a bit in line with expectations, and the sense at that point was that PBOC is maybe getting comfortable with a bit more of CNY appreciation. But quite clearly, in the last 2 days, we've seen now two measures come out. In a way, I shouldn't say two measures, but two actions from PBOC that have actually come out that sort of negates that sort of a speculation. First is they've reduced the hedging cost. They reduced the hedging cost for hedges for FX forwards. And second is this morning they actually fixed CNY at slightly higher than expected. Overall, what this tells us is that they are definitely trying to, at least they're giving a signal that maybe they're unhappy with the current pace of appreciation. And B, given that this measure is more directed towards onshore corporates, what this also, tells us is that the PBOC is giving them an option to hedge any sort of a dollar strength that can happen on the back of any sort of, uncertainty that would be coming up in the next 1.5 months. So I think these are really the two things. But I guess, the medium-term picture, I would feel is pretty much intact still, in the sense that now that China growth is doing much better as compared to US, as well as the rest of the world, as well as the interest rate differential is also, very much in favor of China. I would still think that in the medium to long term, CNY would still be intact in terms of its relative outperformance.
Right, and I was reading reports suggesting that part of this rally, this stupendous rally in the yuan, is also related to the hopes of a Biden win in the upcoming election. And do you think that that trade would perhaps be revisited or recalibrated as we step closer towards elections? And are you monitoring that situation closely?
I think there are a couple of things. No doubt expectations of a higher U.S. fiscal. That would actually come in case, of course, we see a Democratic clean sweep. I guess those expectations are partially getting factored in. But I think at the same time, there is no denying that at the end of the day, China has actually received quite a considerable amount of offshore interest into its bond and equity markets. At the same time, we are seeing less of demand for dollars due to service payments. So overall, given that how China's BOP has also been improving, that also suggests that has also been partially responsible for the CNY appreciation.
Shepard Smith here. Thanks for watching CNBC on YouTube.